Thanks very much for stopping by. I'm going to present to you briefly a long-term care overview. And here's the thing, really, I won't be too long. I'd like to talk briefly about what is long-term care, why long-term care, what are some long-term care costs, and then finally, I will share with you briefly some long-term care solutions. I hope you find this presentation informative. I think you will. So first off, activities of daily living, frequently called ADLs in the industry, these are used as the trigger point. When you can't perform 2 of the 6 ADLs confirmed by a physician for at least 90 days, then that's a trigger point for when you are in need of long-term care. And what those activity of daily livings are, we're talking about eating, transferring, which kind of means from a bed to a chair or a chair to a car, something. Continence, maintaining continence, bathing, going to the restroom, or dressing yourself. So those are the activities of daily living. Once you can't do 2 of those over 90 days certified by a professional, then you are eligible for long-term care. In addition, there are these severe mental impairments. If you're not safe to be left alone, for example, for cognitive issues, well, then that's also qualification for long-term care. So that at the fundamental is in the industry, how we determine whether someone needs long-term care or not. Now, having said that, there's a spectrum of care. I'll start at the bottom initially. Many people, if you ask them when they first need this, they'd like to stay at home. So some people do. If they have early care needs, maybe you can stay at home. A little bit more, there's assisted living where really it's not safe for somebody to stay at home. Maybe they're still independent. Maybe they can cook. Maybe they can do some stuff, but it's not safe. Then you'll get into a nursing home. As the name implies, maybe if there's more activities of daily living, maybe there's more severe. And that nursing home means there's skilled practitioners there. And then finally, hospice or palliative care. That's typically when someone's not expected to get better, when they're just trying to make the person comfortable. So that's a spectrum of care. Really, long-term care can potentially apply to any of those. Let's see. Yeah. So I will keep moving. Okay, here's a few stats. Many will need long-term care. These are some 2015 stats, but these numbers are really representative even today. So 70% of people over 65 are going to need long-term care here in the US at some point in time. Now, having said that, of long-term care recipients, actually there are 40%, it's less than half, but still a significant number that are under 65, that is some as young as 18. As you might imagine, there's certain scenarios when that occurs. So the implication from this slide is many people eventually are going to need long-term care, unfortunately. Now, having said that, I will remark briefly about the causes of long-term care. Fractures, breakage from a fall. Eventually people get old and they start falling. Accidents can occur and result in the need for long-term care. Arthritis, common. Cardiovascular disorders, strokes, heart attack, heart conditions, those can actually limit somebody's ability to do one or two of those ADLs, and that's going to be a cause for long-term care. Diabetes itself, once your pancreas doesn't produce insulin, actually it has negative impacts on other parts of the body. So that's a common source of long-term care need eventually. Parkinson's disease, and then other cognitive impairments, be it Alzheimer's, other. So actually, that's the thing. There's a graphic on here, kind of the wheels of life. It kind of illustrates that. But you know how that goes. You start out in a baby carriage, training wheels, bike, driving. Eventually, they go through the stage of a sports car, minivan. But eventually, you retire your RV. Maybe you're on one of the scooter or the Scout things, and eventually in a wheelchair. And we typically all kind of go through those cycles eventually. Now, I would like to make another kind of quantitative comparison for you, comparing other risks to long-term care. Actually, there's really only 5 out of 1,000 will have a house fire here in the US. The average losses only cost $3,400. And if you think about it, that's pretty small probability. Now, almost everybody has insurance. So many people recognize the need, they insure that. Actually, the loss is relatively small, and it's actually relatively unlikely. 70 out of 1,000 will actually have an auto accident. And again, the average cost is $3,000. Now, as you know, you could be a total, it could get higher than that, but as a general rule, 70 out of 1,000 will have them. So that's still not that likely. Now, as we talked about previously, 70%, so that's 700 out of 1,000 who reach age 65. So a higher percentage are actually going to require this in some point. And it's going to cost a lot more than $3,000. I'll share some more information about it, but basically anywhere from $50,000 to $150,000 per year. So the message of this slide is, it's actually more likely than the other things we insure, and it's more costly. So it's really something to consider. You should really consider long-term care solution of some form. Let me share with a little bit more for you. Let me quantify this further. So another way to say this is 2 out of 3 people over 65 are going to require long-term care. Now, if I average it across all different kinds of people and claims, on average, those care is 3.8. Let's just call it 4 years. So that's the average claim. So most people, when they have these policies, they're not doing it for 1 or 2 years. They're not doing it for 10 years. It's around 4 years. And then finally, one other thing I would offer to you is once somebody hits an Alzheimer's diagnosis after age 70, which as you'll recall is one of the trigger points for long-term care, then they last 4 to 7 years. So these are just some more kind of, I'm quantifying for you so you get a feel for the likelihood of this and how long this thing occurs. I think from this slide, the one I would have you take away most from is 4 years. So if you're considering a long-term solution, you don't have to solve the problem for 10 or 20 years statistically, but you probably need to solve it 4 or 5 years, something like that. Just got a few more slides I would share with you. Here's something about the cost of care. These are 4 states here, current pricing. Texas, California, New York, these high population states, and Washington State. You can see I have a range here, the low and the high range. So even at the low end, Texas is the lowest of those, $27K per year, goes as high as 67. California gets up to 36. New York is right there with it, 35. Washington State, where there's a high cost living result, is 40K. And those are the low ends. If you notice, the high end of these things, even currently, people are paying over $100,000 for care in all these states except for Texas. So my message is right now, the cost of care per year is expensive. Now, this is 2021 data. Do you think it's going up or down? I've got some projections here for you. Texas will approximately double. In 20 years, it'll be at 140 on the high end. It'll be $250,000 expected in California and really over $300,000 in New York. So the message is this is expensive per year. It's going to get more expensive. I will remind you, you don't have to plan for it that long, but for maybe 4 or 6 years, you really ought to consider being able to pay for some care, depending on how that covers in the pyramid, if you recall. So now we're getting a good feel, I think, of the need for long-term care, the price of long-term care. Let me just talk about the impacts kind of even above financially, perhaps. There are physical, emotional, and financial impacts. Assets and income previously allocated for retirement will potentially be spent on long-term care. So you've worked all your life, you've saved in 401k, invested, you've got funds built up. Oh no, if this thing occurs, you're going to have to eat into that, consume that, so there'll be less left for the family, something you're going to do that if you don't have some kind of solution in place. Typically, children, not all the time, of course, but frequently, children are going to have to take care. Adult children have to take care of parents when that occurs. So there's an implication of them. They need time, perhaps, to do that. Potentially, there'll be a loss of income if somehow, for example, they had to quit their job and take care of this. And then finally, another challenge is family members may not always agree on the care decision. And as you might imagine, the more costly it is or the less resources there are, the more challenging that stress occurs. If you've got more funds available, that can kind of give you more options. So ideally, that will reduce the amount of stress this occurrence will have on the family. Okay, another stat kind of financial related, medical bills are the biggest cause of U.S. bankruptcy. People get bankruptcy. This Harvard study found that more than half, 62%, were because of major medical. So unfortunately, cost of health care, major medical goes up. And so more than half people hit bankruptcy. It's because of this very scenario. Some kind of health condition eats up the savings that somebody has built up more than half the time. Okay, now we're almost done. I think now that you've got I think I've sensitized you to the need and understanding. I would like to talk only briefly about different solutions for this. So this says strategize a long-term care plan with a combination. You don't have to do just one of these solutions. Potentially, you could use one or more of these in combination. There are traditional long-term care policies that have been around for a while. Not unlike car insurance, perhaps it's kind of a use it or lose it. Now, these are more cost-effective, perhaps it's maybe the least expensive version, but that's the thing. Potentially in a legacy version of these products, you're paying a premium, and if the trigger occurs, then you'll get X number of months, for example, benefit. But conversely, if it doesn't happen, then it's kind of lost. An alternative way to consider this is life insurance plus a long-term care rider. So you could have some death benefit if and when the person passes away. That will not yet. Eventually, we will all pass away. There's a death benefit associated with it. There's cash value built up in these, and then there are long-term care benefits. You add that right on. So it's a life insurance policy, but it's been added a long-term care rider that helps address this issue. Now, 2 other things of long-term care that I will address, that I'll remark about briefly. There's an asset-linked or asset-based long-term care. This actually has at a minimum death benefits ROP, that is return of premium. So that's kind of like, in other words, all the monies that I've been, so if I've got this policy, I've been putting in X number of months and or years, when I pass away, at least those monies come back. So you compare to that to the traditional LTC, that's attractive. And in addition, it has long-term care benefits. So really the asset linked one and the traditional LTC are pretty similar, but at least I've got this return of premium on this one. And then finally, the last possibility, there is an annuity based. So this is a way to address this. And what happens here is there will be account value, and then the long-term care benefits can actually, you can build this so that they will increase. So it's one thing to say, like we talked about, if I'm going to get a policy for $7,000 a month for 4 years, well, that's $7,000 now, but potentially with annuity based thing, I can address and then consider the prospect of, we saw in 20 years, maybe I need 14,000. So these are 4 different versions, ways this can be addressed. All these something to consider. You can even be done in combination. Now, having said that, just a couple more final remarks. To consider this long-term care strategy, several things to consider. The age and the health status for ourselves, or whoever we're covering, the financial status. Some of these have a very, how much do you already have available? How much do you want to risk? How much you willing to give up? How much can you pay? The family structure. Is there any kids involved? Are there multiple kids? And then finally, the preference, even in terms of where someone's going to stay. How are you going to stay at home? Want to pay for somebody to stay at home? You want to go do system living? So know the key rules. We need to know about cash indemnity that will pay out. Reimbursement, kind of talked about both those. Some policies have that, some do not. The cost, affordable and suitable. And then per previous remarks, really the appropriate products, we can do a combination of those. The traditional long-term care, the asset-based with benefits, an IUL or the rider, or the traditional the traditional long-term care plan with, an annuity with long-term care benefits. So that's the thing. Really, it's not a simple solution, but it's not unachievable. Considering all these plans, pick a couple of those, and we have a nice solution for it. Having said that, in closing, come on, I got 3 things. Number 1, if you have any questions about this, please do reach out to me. I'd love to discuss this. My questions to you are, number 1, how do you plan to prepare for your long-term care? And then finally, actually, my final question for you, when can we reconvene to look at some options for you and your family? Please let me know. Thank you.